Hello and welcome to the fifth episode in Smaulgld series on the CIA and gold. In this series, we examine CIA declassified documents about their views on the gold market. CIA gold to fall to $58 an ounce. Well, today we're going to look at key events in the gold market according to the CIA in 1972. 1972 was a pivotal year for the gold market. If you recall from the last episode, in August of 1971, Richard Nixon took the United States off the gold standard and temporarily disallowed the dollars held by foreign central banks to be brought to the U.S. Treasury in exchange for gold. Well, 1972 was the first full year, where central banks could no longer exchange their dollars for gold. Also during the year, the world's first futures market opened in Winnipeg in November 1972. We're going to talk about that. Gold hit a record $70 per ounce, but was projected by the CIA to fall to $58 an ounce in 1973. And gold remained an attractive reserve asset by central banks. We're going to go through some of the highlights of this particular CIA report. Now, this CIA report was classified as confidential. The prior documents we looked at when the United States was on the gold standard were classified as secret. Now, some of you may recall during James Comey's semi-indictment of Hillary Clinton, he kind of went through the different classifications. We'll quickly go through them now. A secret classification is just below top secret, which could cause grave damage to the United States, and even confidential information that is put in the wrong hands could cause damage to national security if disclosed without proper authorization. So these documents that we're looking at, which have been declassified, at the time were secret or confidential. They were very important intelligence about what was going on in the gold market, because the dollar was and still is a strategic asset, but gold was a very important component of what was going on in the international financial markets, and therefore the intelligence about gold was either confidential or even secret. And the prior documents that we looked at contained a warning that said this document contains information affecting the national defense of the United States. So that was a secret. Now, this document that we're going to look at today, the World Gold Market in 19, excuse me, the World Gold Market in 1972 and prospects for 1973, this one was marked confidential and didn't have that warning about affecting national defense. And most likely the reason for that is the United States was off the gold standard in 1972. So the role of gold in the international financial system was starting to abate. The importance of it was starting to abate. In 1972 was a transitional year, which the world's monetary system reluctantly weaned itself off gold. Now, the price of gold in 1972 reached a record high of $70 an ounce, which was a 100% increase from the official price of $35 an ounce. And the CIA attributed the increase in price was due to a 1/3 decrease in gold sales from non-communist countries. And the big countries at the time that were selling gold were South Africa and Russia. They were the two largest producers at the time. And South Africa sold less gold because its balance of payments had improved, so they used to pay. Now, South Africa, you got to remember, had been very important geopolitically during that time period of the gold standard from 1944 to 1971, because they were the ones providing the commodity that was backing the US dollar, which was gold. And as we'll see as we go forward, Saudi Arabia would replace South Africa in geopolitical importance in 1973-1974 as the US arranged the petrodollar agreements, where oil instead of gold would underpin the dollar. The CIA also noted, which I thought was interesting, that most gold producing countries at the time sold all of their gold. It was only Russia and South Africa that sold only enough to meet their balance of payments. So even though countries wanted gold, they still viewed it as something they can get a good price for in the free market, and they sold their entire production, other than Russia and South Africa. Russia at the time was communist, and South Africa was part of the so-called free market. Now, higher gold prices in 1972 curbed yearly demand, as you would expect if you have a basically doubling of the price. There was some increase in speculative gold buying, but the CIA estimated that it only accounted for about 5% of overall supply, and that the real reason for the increase in the price of gold in 1972 was due to that one-third decline in supply rather than any increase in demand. After hitting a high of $70 an ounce in August of 1972, the price of gold stabilized the remainder of the year around the $63 to $66 an ounce. The CIA expected that the gold supply would increase slightly in 1973 due to increased South African and Russian sales, which would probably drive the price of the gold down to about $58 an ounce. That's the title of this YouTube and blog post. But gold remained an attractive reserve asset in 1972 as the price rose. Now, even though the U.S. gold window closed by Nixon in August of 1971 and remained closed, foreign central banks continued to hold gold. France, particularly, Italy, no interest in losing their gold, and some even pressured the United States to reopen the gold window. They were unsuccessful in that. In February of 1972, the dollar was devalued and the official gold price increased from $35 an ounce to $38 an ounce. But the CIA noted that nationals have, quote, sought to keep their gold reserves intact in times of payment difficulties. The United Kingdom, for example, borrowed against its non-gold reserves during the summer run on sterling rather than risk a portion of its gold reserves to support the pound. Italy threatened to drop out of the EC currency arrangement, which, among other things, called for a member state to repay debts arising from central bank intervention in the same proportion as its reserves in gold. And Rome was persuaded to keep the lira in the EC band by receiving permission to repay those intervention obligations in dollars. So clearly there was a preference for gold over their own currency, over SDRs, and over dollars. They would rather have the gold than any other reserve asset. Now, here's a point I talk about a lot. As I view under the Bretton Woods Agreement, the gold standard, where the dollar was really a dollar standard, where you could turn your dollars in for gold, made the U.S. basically an official gold broker. Irrespective of how you obtained your dollars, you could have obtained them in exchanges with other countries, had a surplus. You could then take your dollars, like France and Germany did in Switzerland, and bring them to the United States and get gold for them. But in a footnote, the CIA noted that although the U.S. gold window remained closed, the United States is still willing to sell gold to new IMF members needing gold to meet subscription requirements. The first gold futures exchange opened in Winnipeg. Now, it was a small exchange. It opened in the middle of November of 1972, at the end of the year. And the CIA noted gold is sold there for delivery to specific Canadian cities in January, April, July, October, and up to 1.5 years later. And they noted that some observers expected the futures trading will remove some short-term speculative transactions from the more established markets, but the relatively poor communications and the time difference between Winnipeg and other gold centers, however, and the high costs associated with initial trading will hold down the new market's impact. So unlike a couple of years later when they actually created the larger gold futures markets in New York and London, they expected that this small market might help remove some short-term speculative transactions. However, a larger gold futures market, as noted in a December 1974 cable just before the legalization of gold for U.S. citizens to hold later that year in 1974 and prior to the opening of the gold futures market, they thought that physical trading, it would dwarf physical trading, the futures market, and that it would actually create a highly volatile market and not remove short-term speculation, but actually be a place for short-term speculation. And because of that increased speculation and volatility, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term holdings by U.S. citizens. So it clearly was anticipated by the end of 1974 that a futures market would remove the desire to hold gold and even the need to hold gold by creating a futures market in gold that would be settled in, it would be a paper futures transaction rather than a physically traded commodities exchange. So where did the CIA see, and they weren't really focused on the futures markets, but the future of gold they were looking at in 1972 was what impact gold, or what role was gold going to play in the monetary system post the end of Bretton Woods in 1971. What was gold going to be in 1973? Now, this is before the petrodollar, so they still had not sorted out how the United States would remain the world's reserve currency. The EU had its own issues. There was issues with the IMF. So what was going to be the role of gold? Well, they noted the role of gold in the new monetary system, this is from the CIA document, will be an important issue in international monetary reform negotiations. And they noted that France and Italy still had a lot of gold, so did Germany. And they said if and when monetary reform is achieved, it is almost certain that gold will play a less important role in the monetary system. So once the United States went off the gold standard, it became apparent that the plan was to demonetize gold, even though, and to this day, central banks still hold gold as a reserve asset, whether as tradition or because they know that gold is the premier currency, as Alan Greenspan mentioned at a conference at the Council of Foreign Relations a couple of years back. That about does it for today. Tomorrow is Easter. For those of you who celebrate, happy Easter. I'll probably be a little bit later in the day on the week in review. There's a lot in that podcast coming up, so be sure to tune in tomorrow.